We have a 20% tariff already. Another 25 would be a 45% tariff on a $130 running shoe. It's unaffordable. So we had to make a decision in January. We're de-emphasizing China. We're still going to have an R&D center there and some small production capability, but the volume's going to Vietnam, and we'll add a third country that we'll name next year.
Okay, did you do that math? You racked it up? The 20% tariff on footwear that Brooks Running CEO Jim Weber referred to dates back to those two guys on your screen in 1930. Those two are two lawmakers by the name of, I love these names, Reed Smoot and Willis Hawley. Those two together raised tariffs on 20, or was it 30,000 imported goods coming into the U.S. And many say that extended and exacerbated the Great Depression of 1929. Those tariffs still in place for the footwear industry. So now shoemakers, footwear makers and sellers are, well, putting their foot down, urging President Trump to remove footwear products from his latest tranche of tariffs, which would lead to an additional 25% in duties and shoes and sundry. Retail analyst Hitha Herzog joins us right now, and a woman who loves a great pair of shoes, no doubt.
Oh, no doubt, especially when it comes to running shoes.
Yeah, running shoes, but you see what they're up against. They already had for many years 20% tariffs, and now if they get the 25% slapped on, 45%, untenable.
We're talking about a pair of running shoes that maybe cost $159 will essentially go up to somewhere around $195, pushing $200. Right now, with these impending tariffs, this might cost a family of four about $500 a year. If it goes up, it would go into the thousands.
And kids' feet grow very quickly.
Yes.
Very quickly. So one minute you got your kid in a 7, and the next thing you know, it's, oh, wait a minute, 8.5.
Right.
So here's what, just so everybody knows, what the footwear giants have done. They put their names on a letter, and they have sent it to President Trump. And we can show you some of this letter, and it is very strongly worded. The letter to the president on the impact of a tariff hike on footwear. Here's what they say. The proposed additional tariff of 25% on footwear would be catastrophic for our consumers, our companies, and the American economy as a whole. And folks, I need you to listen to this part. There should be no misunderstanding. It is U.S. consumers who pay for tariffs on products that are imported. It is an unavoidable fact.
So what is also very interesting about this is I think people are saying it's very easy for these companies to leave China, to relocate their manufacturing. There are countries like Vietnam that are close by, or, you know, even manufacturing in Africa. It is very difficult to up and move your manufacturing that quickly. In some cases, it's taken years. Now, there are companies like Under Armour and Nike that have been in the process of trying to move that manufacturing, but this takes a very long time. So this isn't something that can happen instantaneously so that these, you know, companies like these footwear manufacturers can avoid the tariffs and, you know, ostensibly pass that along to the consumer. This is it's gonna overlap, and the consumer's gonna end up paying for that.
The who consumer, Chinese or U.S.?
The U.S. consumer. Okay. So, I mean, yes, they are correct. The consumer pays for the tariffs, but it comes in price hikes. So that gets translated into what we end up paying for those shoes, for those accessories that are going to get tariffed.
You know, it's amazing because Jim Weber of Brooks Running saw the writing on the wall and said, Liz, we could not wait around. We could not wait around to see how this trade war would play. They had to take a huge investment. They're lucky that Berkshire Hathaway is their parent.
Right.
They had the cash flow, and they had to move. It took months to Vietnam.
Right. And, you know, he has the ability to see around corners in that instance. What about the companies that are just, you know, maybe starting out? You know, there are companies like Allbirds, for example, you know, or companies like that are smaller, that have manufacturing in China, that can't just get up and move that quickly.
Yeah. And they employ people here in the U.S.
Thousands of jobs we're talking about, Liz.
Okay. All right. Hitha, thank you very much.
Thank you.
Hitha Herzog. So that was your lesson of the day. Smoot, Hawley. Those two guys, 30,000 different products with tariffs slapped on them back during the Depression, and many say it extended the Great Depression. So we got to watch this very closely.